One of the problems with recruiting for investment banking is not the knowledge or skills you acquire, but the access to talk with real investment bankers to put your best foot forward. Our sponsor, WSO Academy, can provide those connections with 60 head mentors who are finance professionals at top firms like Goldman, Centerview, and JP Morgan. Imagine being able to get on the phone within 24 hours with one of the Academy's 1,300 mentors right before a critical interview. Get on the waitlist for WSO Academy today by clicking the link in the show notes or by visiting wallstreetoasis.com/academy. All right. Welcome to Investment Banking Insights. This is the only show dedicated to helping you learn both the technical and non-technical aspects of the investment banking process. My name is Alex Mason and I am your host. Hope you're doing well. Kicking off another week here. I'm excited to see what this week brings, and I'm hoping that you're having a great week too. Today, I wanted to provide a broad overview of what the steps are in a comparable companies analysis. We've already talked about one of the steps in detail, which is selecting the universe of comparable companies. And that is step number 1. Select the universe of comparable companies. And just as a quick recap, what do you actually need to do when you're thinking about this? Well, you think about what kind of companies would make useful comparisons. If you have a target company that has certain characteristics, then you want to find other companies that share some of those similarities. So for example, the business model, first and foremost, is the business model similar? What are you selling? What is a target company selling? Can you find other companies that sell similar things and in a similar way? You also want to look at things like the size of the business in terms of revenue. Maybe you look at market cap. Also, you want to look at different profitability metrics like EBITDA or the margins that they have. So these are just some quick examples, but these are the kinds of attributes that you want to look at when selecting your universe of comparable companies. And remember, it's always a lot easier to rely on public company information because that's readily available. So just look at publicly traded stocks and the SEC filings underneath them, and that'll help you get an idea of what some good comparable companies are. So there's 5 steps. That's step number 1. Step number 2 is to locate the financial information. You actually have to find the financials in order to do your comparable companies analysis. So as I mentioned, you're looking at public companies for the most part here. So you're looking at the filings for each company and then locating the necessary info. You can also use databases and things like that for a faster analysis, and we'll get into that a little bit more in a future episode. But that is basically what you do. You got to find the financial information. Step number 3 is to put your key statistics, your ratios, your trading multiples in a spreadsheet. Compile them all. Synthesize the information. Up until this point, you've just been deciding on what companies to compare and then gathering the information. Now you've got all this data, you need to actually put it together because this is necessary in order to actually compare one company to another. So synthesize the info in a way that you can understand the big picture. Step number 4 is benchmarking. So this is where you benchmark the comparable companies and actually compare key statistics of the target company with the comparable companies. So for example, if your target company has a certain EBITDA number, maybe it's 500 million or 600 million, and then your comparable companies, you look at the EBITDA of those companies. So maybe it's 200 million, 500 million, 600 million, 650 million, something like that. And that'll help you understand where the target company falls for that specific metric within the comparable set. And then you do this for other metrics too, like revenue, like EBIT, like free cash flow. You can do it for all sorts of things in order to understand where your company falls in the mix. And then step 5 is to determine the valuation range for the target company. This is really what we're trying to do, right? The reason we're even doing this whole thing is to figure out what is a target company worth. And comparable companies is just one method that we use to achieve that. So you have to answer the question, what is the valuation implied by the comparables? And the short answer about how to do this is to look at the ratios. So look at your enterprise value to EBITDA multiple. Look at your price to earnings ratio. And maybe you look at other ratios that are relevant for your specific situation. But you can basically look at those ratios and back calculate what the implied valuation of the target company should be based on the data that you've already gathered. So those are the 5 steps. Number 1, select the universe of comparable companies. Number 2, locate your financial information. Number 3, put your key statistics into a spreadsheet. Number 4, benchmark the comparables. And then number 5, determine your valuation range. So that's really what you're doing. And what we're going to be doing next throughout the week is going through each of these steps in more detail. Now, we've already, as I've said, gone through step number 1 in a prior episode recently, so we're going to skip that one, but we're going to be going into next, number 2, locating financial information. I mean, yes, it's easy enough to say, like, go to sec.gov and just pull up the filings, but what do you actually look for? How do you actually find it? Some information is in different places than you might expect, so we're going to get into those details and the nitty-gritty in the next episode. But for now, that's what I got for you today on Investment Banking Insights. Have a great one.